Good morning, ladies and gentlemen, and welcome to the anniversary of when the world was introduced to Van Halen. And yes, if you were like me, you owned this and played Eruption on your cassette player maybe 300 times. But that's not what we're here to talk about. We are here to talk about the futures. Futures are dead flat. They've been dead flat all night. And I see no reason why they would not be dead flat because of where we have reached to. So, once again, futures are dead flat, but let's just highlight that. The Dow Jones remains trading above 50,000. We had that small little breach down below that beautiful Fibonacci at 49,987. Yesterday, just to be algo bounced right off of it, and we have been trading flat all night long. The Nasdaq is still below the 100-day moving average, well below the 50-day moving average, but it is above the 5-day moving average. So that in and of itself is bullish. Whereas over here on the ES, we were not able to touch 7,004 yesterday, unfortunately, but we did have a few rejections there at 69.93. And today is a brand new day with everything having been shoved over the last few days over into the Russell 2000. So let's get off of that and move on to a little bit more specific, because as I emailed out there on Friday, because we had already been discussing it on Thursday, was that bullish or bearish, it doesn't matter. It does not matter. A bounce is coming. We've got a beautiful little double bottom right down there at 67.90. Beautiful double bottom down there. We came down for a perfect ABC. Couldn't have fucking drawn it out better. And whether you look at it from a bullish point of view or a bearish point of view, you're getting a bounce, and that's exactly what we did. Unfortunately, what happened there on Friday was we ran a little bit further than what was expected, as we had that rally Friday up into the 69.40s, and then yesterday took us a little bit further. So moving on to, again, yesterday, why I spent the time to go over and annotate exactly where your closes are. 4 above 69.75, 0 above 69.70, 1 above 69.65, but below 69.70, blah, 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 blah. You have it. It's not only there, but it's also in your spread room, like I posted there at 3:25 in the morning, virtually 24 hours ago. And then again, yesterday with what looked great, because we had our little gap down, things were looking smooth, all until the 10 minutes after the opening bell came out. I still sit by my gonna see 68.79 this week, which I threw out 3 hours before the end of the opening bell. But obviously my looking for minus 69.20 rubbed a few feathers the wrong way, and sayonara baby. Good luck. I hope everything works out for you in life. 69.1726 is your weekly candle. We already discussed that in detail, and this was our chart as we went into the very beginning of the day, first 3 minutes of the day. Nice rejection there at 69.20. Looking how we've got our moving averages sitting there at 69.28, 69.24. Couldn't be a better setup, and then the algo just absolutely ripped it right on up there into the upper end of that 76.4 retracement, which then came to the point where, okay, well, let's start looking at this a little bit closer, as Barbara, that Goldman Sachs, not Goldman Sachs, the Lehman Brothers trade, the multi-billionaire from the Lehman Brothers trade, Barbara Dolan, 69.70, 69.65s for Friday at 3:10. Very intelligent trade, and like I shared there at 11:30. Your SPX 2026 closes 0 above 69.80, 4 above 69.75, 0 above 69.70 but below 69.75, only 1 above 69.65 but below 69.70. And where did you close? Well, let's pull up the chart and see where we closed. We closed at 69.6482. Now, it's things like that kind of data, where when you're looking at your trades that were sent out for the day and the way that everything was set up, and oh yeah, look at that Super Bowl today. It's a Super Bowl. It's the Super Bowl. We're definitely going all in. Super Bowl, Super Bowl. That's not a season. It's a Super Bowl every day. And yeah, we got run over, but because your data is there, that's the reason why you're able to take advantage of it, and you can do with it as you please. It's completely up to you. And I took it on myself because I wasn't going to go and feed anybody more horse shit, because I could already see that everybody was starting to go, this guy doesn't know shit. He doesn't know what the fuck he's talking about. Well, 150 grand later, everything's pretty copacetic, because as you can see on your QQQ, which is still negative on the year, negative on the month, you don't have any legs. All you're doing is you're shoving what you can into the Dow Jones, which can't take any more, and over into the Russell 2000, which can't handle any more. And here we are, floating into what I'll come over to you in a second. Your Russell 2000 being up 7.77% year to date, having their exactly plus 1% day yesterday, reaching 267.67 to the penny, which is right where your Fibonacci is, Max. So if you want to pay attention to that, because you have now made a 12-point, better than 12-point move off of your Thursday low of 255. So I'm pretty much done with this, and I'm just going to go over and highlight for you quickly where we are on these charts, because this is your zoomed out version. So to zoom it in, make it simpler, here was our highs from last week over there at 69.93.08, and then our sell-off, which I did not chart on this chart because I like to keep this chart clean. Coming off of that beautiful little double bottom on Thursday, right on down there, 67.80, 67.89, whatever the number was, 67.83. We have a clean. Doesn't matter how you look at this, bullish or bearish. It does not matter how you look at this, bullish or bearish. You have a clean ABC, right to the 123.6 extension, fits like a glove. You have a clean 1, 2, 3, 4, 5, fits like a glove, right above the 161.8 extension, just below the 200 extension, for this 2.95% bounce that we have had over the course of 2 days. 2 days. 2. As you can see, your pivots, there's nothing wrong with these pivots whatsoever. You see your 69.20, you see your 69.20, you see your 69.35, you see your 69.65. This game remains the same game. All it is it's a little bit changed because of the volatility that we've had. Looking here in a zoomed out version, you can't figure out what that means. So we bring it into a zoomed in version, and here you go. Your 69.93 drop down to 67.80. Your double bottom little bounce, boom, 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 and your B wave having already breached the 76.4 retracement. The reason why I went and put on these extensions to see, okay, so where are we and where are we headed to? And no matter which way you look at it, it all fits. So moving into this from a broader point of view, looking at it from a daily, like I shared, as you get oversold on your daily, it doesn't matter how ugly you are still going to be given prize money, because you are going to get bounced regardless, no matter what, and you still have this ongoing, more than 3 month long running sell divergence on your bigger time frame, which is your daily. Now you come over here again onto your hourly, which is what I was talking about, where, dude, this is just, I mean, come on. We were just getting up into overbought, yesterday. Ridiculous number of candles altogether, and all you do is go and look back, and you can see the same way that, although none of these are identical, the only one that is identical is right over here, right after Christmas, with the number of 1 hour candles that were all consecutive. Here's your run up, there's your sell off. Here's your run up, a little bit flat because we're going into the FOMC meeting. There's your sell off. Here's your run up, there's your dip. Here's your run up, there's your dip. Here's your run up. We don't know what the answer is over here, as we just came off the 100-day moving average. We have our 50-day moving average, which was breached and recovered over there on Friday. And here we are sitting above all the moving averages with the big Fibonacci 69, 65, 77 staring everybody right in the face. So that's what you got with your Dow Jones still sitting up here at 50,000. Give it a couple more pennies. You hit 53, 68, 64. Don't know whether that's the answer for you that you're looking for, or whether or not the QQQ, you really like this. You really, really like this, that it's trading below 69.20, or sorry, 620. You know, it's made it to the 50 retracement of this recent dip. The 50 retracement trading below the 50-day moving average, and everybody has already reported their earnings. So then you come out to your IWM. Or what are you getting on your IWM? Well, you're still getting a lot of trough up here above 255, which has been going on now for the better part of the year after that big bounce off of 228. So 228 over here into 246, everything is still clean. It still says that you have a fractional opportunity to go point up into that 274, 271.65, as you've only made it up 58.15% above the April lows. And you're treading right here on your, ta-da, 267.52. So I hope you enjoy everything Tuesday has to offer you. It's Tuesday, April the 10th, 2026. Today will never, ever be repeated in history. So whatever it is that you do today, make it momentous so that you at least have memories